Now, for some insights on the news that's shaping markets, for that, I want to welcome in Danielle DiMartino Booth, CEO and Chief Strategist for QI Research. All right, Danielle, thank you so much for joining us here at the Stock Exchange, coming in town as well. It's good to see you in person. The last time I've talked, it's been a long time. Yeah. It's been virtual, actually. Yep. So let's start out with just kind of a tariff context here. We did get some preliminary details from President Trump. So obviously there is still news unfolding on this. We don't have all of the details yet, but at least we're starting to get a framework. President Trump is literally still speaking. Right. So we don't have, I know you can't go into a lot without all of the details.
As one of my institutional clients said, your English breakfast tea is going to be a bit cheaper. And I said, I don't drink tea. So.
Yes. Okay. So how do you read through that we at least have one deal on the table as it stands? Is it a positive?
So I think that this removes a layer of uncertainty, and uncertainty's definitely been weighing on investor sentiment. It's been weighing on the markets, and most importantly, I think what we have is the first template. We have kind of the first blueprint of the intentions of the administration, the thinking of Treasury Secretary Scott Bessent, how he wants to craft these agreements, obviously with one of our closest allies, and therefore what it can look like with the other kind of 17 countries that they've named as being the most important ones to get the first layer of deals done with. Okay. So again, uncertainty has been very heavy.
I know it has, and I feel like we're starting to get a roadmap for clarity. And so I got to ask you this. So you mentioned Treasury Secretary Scott Bessent. So the next step of this is heading to Switzerland, right? And I love that they picked this neutral place to kind of, if there isn't a more
very symbolic,
exactly, isn't a more neutral place to have these kind of conversations. You have Treasury Secretary Scott Bessent and the trade rep Jameson Greer heading to Switzerland to have conversations with their counterparties from China. How do we read through that?
Well, I think we have to. I think we have to be very careful here, because the first trade deal that was forged with China, it wasn't really fully reciprocal, to use a word that's been used a lot. Right. There wasn't carry through on the part of China, but more importantly, in the here and now, it took a very long time. A very long time to hammer out all of the details. I would look at this as being the first of many meetings. Right. And not anticipate that when futures open on Sunday night in Asia, that there's going to be anything definitive on the wires. Yeah. This is just the beginning. Yeah. And it truly will be a negotiation. And we don't know, given that China has been trying to make its own unilateral negotiations with some of our closest trading partners, we don't know where all of the thinking is at this point. So, again, I would be very careful about drawing any conclusions about anything imminent. Okay. But the door's open. Yeah.
Well, that's a good sign. That means that you can at least have conversations. Anytime there's a negotiation, it's a good sign when the door is open.
I mean, that's critical for countless small, mid-sized companies in the United States that don't necessarily, have the ability as being a huge company to command carve-outs and exceptions. Right. And we really do need to be thinking, I think, right now about the smaller and mid-sized companies, because those are the ones that are closing the quickest.
Yeah, I mean, you make a great point, because it's not like an Apple, it's not like an NVIDIA where they can go to the White House, where they have teams who can, lobby the White House for these carve-outs. And, even with what we're seeing about the rollbacks, about export constrictions, they don't have that kind of manpower. Let me ask you a little bit about the Fed. So even before we got the announcements, or as we start to get the announcements about tariffs, we also got this commentary on Truth Social. President Trump sounded off on Truth Social about Powell and his views, and saying, quote, too late. First of all, I want to ask initially just your overall reaction to not so much the move. We expected rates to stay between 4.25% and 4.5%, but the commentary afterwards, wait and see, wait. That stood out a lot. Does that make sense to you? Was that what you expected to hear?
It was what I expected to hear. That didn't make it any less disappointing. I think that I was just tweeting out that we've had 7 large bankruptcies in 7 days. As of today, that's 8 now. We had 7 for the entire month of April. There is clear downside momentum in the economy. I don't think it's fair that Powell completely is disregarding some of the sentiment surveys that say Americans are not just concerned about inflation. Americans are now voicing concerns about the job market. So even if, as Powell rightly observes, we're not seeing it in the hard data, you cannot be so dismissive of U.S. households who are saying things are getting bad here. I have kids in college. The jobs are not there for the taking. The demand for labor is certainly not what it was 2 or 3 years ago. And if Powell says that monetary policy is being made in the public good, you should be listening to the public.
Okay, so do you think, because look, there are those who argue that some of the hard data is holding up. Yes, we did see a contraction in GDP,
yes.
But the job market, at least when it comes to the headline numbers, is still holding up. Obviously, by the next Fed meeting, and look, you have insight, you worked for the Fed once upon a time. By the next meeting, we'll have 6 weeks of more raw data to parse through for the Fed. Do you have the view that by the time the Fed makes a move, if they do cut at the next meeting, that it will be too late, or they'll have to do too much?
I think we could see a repeat of kind of the Fed holding last July and then having to come in guns a-blazing in September with a larger rate cut than they'd anticipated. I realized that in the initial jobless claims data, for example, that we're not seeing anything that's truly alarming. I think traders on the street would say, oh, there's 300,000, that's problematic for an initial jobless claims weekly number. But we've got 1.9 million Americans who are continuing jobless claimants. We have 1.9 million Americans who have been long-term unemployed for 27 weeks or more. This is hard data, and the Fed has that in hand. We also have downward revisions to 2024 payrolls to the tune of, in the year ended March 31, 2025, 886,000 jobs that we initially were reported as hard data that have been revised away.
Okay.
And so there are upwards of 800 PhDs at the Fed. They can be paying attention to other than just headline non-farm payrolls and weekly initial jobless claims. There's plenty of other data for them to be considering in their deliberations that they're ignoring.
Okay. All right. Great perspective. Danielle, thank you. That's Danielle DiMartino Booth, CEO, QI Research. Our thanks to Danielle.